Assalamu alaikum, my dear students. Hope that all of you are fine by the grace of Almighty. Welcome to the online class of Milestone School and College. Let me introduce myself first. I am Farida Yasmin, teacher of Milestone School and College. I would like to conduct your today's business entrepreneurship class. So students, take your business entrepreneurship book, copy, black pen and blue pen with you. Students, at the beginning of my class, I would like to recall the definition of business. I think all of you have remembered it, isn't it? Yes, students. Business is the combination of all the economic activities operated to earn profit in a legitimate way. Now, let's learn another important definition, and that is plan. What is planning? Planning is the guideline of future work process. From this introduction, you can relate the topic with the chapter, that is which chapter we will learn today. Yes, students, today we will learn about chapter 6 and the topic of chapter 6 is business plan. In this chapter, we shall learn about the concept of business plan, importance of business plan, process of business plan, guideline for small business plan, cash flow analysis, and break-even analysis. So let's start this chapter now. Business plan. The main objective of business is to make profit. But if there is planning in running business, success becomes easier and possibility of failure reduces. So the concept of business plan is the chart or graph of the future activities of business. In broader sense, business plan is a guideline through which the objective of the business, nature, management, style, financing, present status, and future development process, etc. are depicted. Actually, business planning provides the proper guidelines for a business to achieve success and follow the right course. It helps the businessman to reach his objective. That is, business plan is a written document which sets out a business plan and objectives and how it will achieve them. In example, by marketing, development, production, etc. Business planning is necessary in both cases, starting a new business or expansion of existing business. Okay, it helps to expand the existing business also. Now we can learn some several names of business plan. Like it has some name. Let's learn another name of plan. It is known as a chart or graph. It's a guideline. It's also known as written document. It works as radar. It's like a roadmap. In brief, it's a blueprint for a business. Now students, the importance of business plan. The importance of business plan is immense in starting the business, maintaining it properly and operating it to reach the objective, such as it helps it is a guideline to operate the business. Then it helps to arrange capital. It helps to proper utilize the government facilities. It helps to make decision. It also helps to gain clear conception. Students, now our next topic is about project. What is project? A project is a planned and thoughtful work process to be completed within a particular time and objective. The success of business depends on right selection of the project. It starts and ends at specified time. A project may be a new venture for investment or expansion of old business. Okay students, now the main topic of today's chapter, that is process of business plan. There are 3 steps of the process of business plan. First one is identifying the project concept. Number 2, evaluation of the concept and project selection. Number 3, submission of business project report. Let's learn this process step by step. First step is identifying the project concept. Selection of the project starts from the identifying the concept of the project by the entrepreneur. During the selection of the project, it is wise to think of products related to entrepreneur's hobby or interest, products having real demand, prevailing disadvantages of the products, or opportunity of using new technology. The sources of new project concepts are entrepreneur's own thinking, then number 2, various government, number 3, non-government publication, number 4, economic and industrial report, number 5, research report. Now, the next step of business process is evaluation of the concept and project selection. An entrepreneur shall make a list of the projects after analyzing the information from various sources. A project can be selected by two methods by analyzing the selected concepts. Number 1 is macro screening and the other is micro screening. Let's start with macro screening. Macro screening is such a process which helps to select a project by evaluating the influential elements of the business concept. All the businesses are influenced by some elements which are beyond control of the entrepreneur, like population, economic environment, social environment, political environment, cultural environment, and legal environment. Students, selection of project through macro screening is an initial stage. To select the projects finally and assess the appropriateness of the project, detailed scrutiny is done with the help of micro screening. Now, micro screening is the detailed process of selecting a project through analyzing the market demand, technical, commercial, and financial aspect, and contribution to the national economy, etc. In case of medium and large business, such as manufacturing or production-oriented business, macro and micro screening both are necessary to select a project. So students, now the last step of business process plan is submission of business project report. A report is a statement of the result of an investigation or of any matter on which definite information is required. The last stage of the business plan is to prepare an excellent report. This report is prepared on the basis of justifiable information of the probability of the selected project. So students, our next topic is Guideline for Small Business Plan. It is necessary to be careful while preparing a business plan. The entrepreneur can make the report himself or with the help of any other specialist. The following guidelines can be followed to prepare a proper business plan. Number 1, precise and free from excessive word. Number 2, focus only on one or two products. Number 3, unknown persons should not be included in the management process. Number 4, comprehensible to all. Any product should not be described with words only, understood by the professionals. Rather, it should be comprehensible to all. Number 5, realistic quantity sales volume. Students, sales volume should be projected on the basis of realistic quantity of production capacity. Sales account should be maintained very carefully. Then number 6, should not be vague information or any wrong information. Number 7, detailed discussion on problems. If there is any problem prevails or any unwanted problems are assuming, that should be detailed discussed on the project. And the last point is involvement of all the members. It is necessary to involve all the members of the management team in making business plan, and if necessary, advice from any expert may be sought for. Students, now let's learn which contents of should be included in small business plan. The subject matter of the business plan may vary on the basis of all the size of the business, variation in nature and types of the business. The following things are common in a business plan. Number 1, name of the business organization. Number 2, address of the business organization. Number 3, name of the entrepreneurs. Number 4, brief of the entrepreneurs or directors. Number 5, nature of business. Suppose it's sole proprietorship or partnership or joint stock company, it should be mentioned there. Number 6, management style of the business. Like the management style is single or partnership or joint management, it should be mentioned there. Number 7, amount of capital. Number 8, precise description of market survey, such as size of the market, possibility of future progress, ways to penetrate the market, pricing of the products, etc. Number 9, possibility of profit generation. Okay, it's an important content, that is possibility of profit generation. Target profit and guideline to achieve future target profit should be mentioned in this point or in this content. Now the last point is number 10, attachment of projected financial statement. Okay, which attachment should be included there? A, total cost of the project. B, projected income. C, projected expenditures. D, projected income statement. E, projected balance sheet. F, projected cash flow statement. G, statement of break-even analysis. So students, let's find out how we can measure the total cost of the project. Total cost of the project is equal to fixed capital plus working capital. That means in total fixed capital and working capital is known as cost of the project. Then what is fixed capital? Fixed capital refers to the investment made by the business for acquiring long-term assets. And what is working capital? The cash available for day-to-day operations of an organization. Strictly speaking, one borrows cash and not working is known as working capital. Now let's see, our next information is about cash flow statement. What is cash flow statement? A cash flow statement is a financial statement that provides aggregated data regarding all cash inflows a company receives from its ongoing operations and external investment sources. Students, it is necessary to estimate the cash flow to operate the business smoothly. This statement can be preserved daily, weekly, and on a monthly basis. Now, another important topic of today's chapter is break-even analysis. Break-even indicates such a state of the business where the income and expenditure of the business become equal. It is neither loss nor profit scenario of the business. Precisely when revenue from quantity of goods sold become equal to the volume of expenditure, it is called break-even. Student, I wish it will be more clear to understand if you watch the following video carefully.
How to calculate the break-even point for your business. This break-even analysis video explains the break-even point in words, in graphs and in formulas. and encourages you to take various actions in your business to improve profitability. A common definition of the break-even point is the sales volume where neither profit nor loss is made. An alternative way of saying the same thing, the break-even point is a sales volume where contribution margin dollars equals fixed cost dollars. Let's look at the break-even point on the graph. On the horizontal axis, the number of units sold. On the vertical axis, the total dollars. Contribution margin dollars go up for every unit sold. Contribution margin is revenue minus variable cost, what you sell the product for minus what it costs you to make an incremental unit. Fixed costs don't vary with the number of units sold. Typical examples of fixed cost are rent, depreciation, and research and development expenditures. The break-even point is right here, where the two lines intersect. Let's put some numbers to the example. If fixed costs are $200,000 and contribution margin is $4 per unit, then the business needs to sell 50,000 units to break even. If the business sells fewer than 50,000 units, the red area, then contribution margin is lower than fixed costs and the business is loss-making. If the business sells more than 50,000 units, the green area, then contribution margin is higher than fixed costs and the business makes a profit. Let's do the exact same break-even analysis but in formulas. The break-even point is the sales volume where contribution margin dollars equals fixed cost dollars. That's the same as saying that the volume sold times the contribution margin per unit equals the fixed cost dollars. And that's the same as saying that the volume sold to break even is equal to the fixed cost dollars divided by the contribution margin per unit. And that's the same as saying that the volume sold to break even is equal to the fixed cost dollars divided by the selling price per unit minus the variable cost per unit. Let's fill in the numbers to illustrate. $200,000 of fixed costs. The business needs $200,000 in contribution margin to cover that $200,000 in fixed costs. At $4 contribution margin per unit, $10 selling price per unit minus $6 variable cost per unit, the volume sold needs to be 50,000 units.
So students, in brief, break-even point is the point at which cost or expenses and revenue are equal. Now the importance of break-even point. Why we have to calculate break-even, or what are the importance of break-even analysis? Number 1, for correct pricing. Number 2, for expected profit. Number 3, for increasing sales volume. Number 4, for profit planning. Number 5, for increasing profit. So students, that was the glimpse of chapter 6, that is business plan. I wish and hope that all of you have understand this chapter very clearly. If you have any problem related to any topic, you can ask your subject teacher. Okay, now collect your homework. Today your homework is mark MCQ and learn exercise of chapter 6. Thank you for watching my class. Thank you students. Assalamu alaikum. Take care everyone.